Welcome, ladies and gentlemen, to another edition of our virtual roadshows by Swiss Resource, Capital AG, and Commodity TV. My name is Jochen Steiger. I'm the founder and CEO of Swiss Resource and also the founder and chief editor of Commodity TV and Rohstoff TV. And we have a great company here today called and named Kuya Silver. And you see already here on the screen a very nice and happy good morning to you to Toronto, David Stein, the CEO. How are you?
I'm well, thank you, Jochen.
Fantastic. Good to hear that. And of course, first of all, before we start, we still have some people here checking in. I wish everybody a happy new year and of course, prosperous and most important, I would say a healthy new year because we still have a lot of challenges we are facing with COVID-19 and some other stuff. And also, I think economically, it's not getting that easy, but we will see how the things are running. And for sure is one thing, everybody is printing money like unbelievable. So we see silver and gold very, very positive for this year. But to that, we will talk later. And before we will start with the presentation of David's presentation for Kuya Silver, let me shortly remind you, we are fully complying to European and Swiss and also to Great Britain data security laws. And nobody can see each other. Nobody can see the names or the emails. This is very important. When you have a question, please use the chat function and type in there your question, please. You can do this in English, German, or also in French. And we will do then the questions and the Q&A after David's presentation. So we have still some people here checking in. That is great. And yeah, I would say that we start slowly but surely. So 48, super. Yeah, let's get started with the presentation. And David, I would say the floor is yours.
All right. Well, thanks again. Very pleased to be here presenting. So I'm the founder and CEO of Kuya Silver. We're a company that just went public a few months ago. And my background is I started off as a mining analyst, actually, about 20 years ago. And although I've got a technical background, I'm trained as a geologist. I've spent most of my career in the capital markets on the buy side and sell side. So I've done investing. I've been an analyst, and I have been basically full time with this company now for the past 3 and a bit years. Since we started it in 2017. So let's move on to the summary, and then we'll go from there. Mm-hmm. So our flagship asset is called Bethania. It's a silver mine in Peru that we recently acquired, and it's a silver mine that was producing up until 2016 as a toll milling operation. So they were mining this very high-grade silver polymetallic ore and then trucking it all over the Andes to have it processed. We identified this opportunity back in 2017. The company, started to invest in this project and de-risk it as a private company for about 3 years before we took the company public just recently in October. We do inherit a resource that is not 43-101 compliant. It is based on extensive data that we have from inside the mine. And so in our view, management's view, it is a very good indication of what we can expect once we start mining. We are going to improve and update that resource this year. And we did announce the acquisition completed in December. We did go public with a 43-101 technical report that is available on CDAR or on our website if you would like to read it. Now, jumping ahead to the present day, the last few months, and what we're looking at doing right now. We completed the RTO, as I mentioned. We raised some money right before the RTO was completed, 12 million Canadian. And we also, before we went public, we received our EIA, our environmental permits for the plant and tailings that we are looking to build at site. Now, that can be a very challenging permit to get. So it was really a great testament to our team that we were able to do this as a private company and get this. And it, I think, significantly de-risks the project going forward. We closed the acquisition, as I mentioned. We engaged Mining Plus, and we're continuing to engage other great contractors, world-class contractors. Maybe not as high profile as Mining Plus for the mine design and the PEA, but you will see that we'll have probably 4 or 5 different groups working on the project over the next year, and we can provide more details about that as if you're interested. Now moving on to January, where we are right now, we're just sort of launching our drill program. So we're doing the preparation for that. So we'll be able to start drilling fairly soon. We will complete a PEA on the mine expansion. Now, we already know what we're going to do for the mine expansion. We're going to be building a mill, which we already permitted at 350 tons per day, the environmental permit at least. And then we know what throughput rate we're going to do. We know the design and where everything is going to be. So the PEA is more, just to provide the market with some additional information that we can talk about. But we're going to be plowing ahead with this expansion, and we're very well positioned to go ahead with it this year. So that'll get us to financing the plant and the expansion. That'll happen later this year, in a few months, and then you'll see us as well continue to build the management team for the for the year. And we've already started to hire some key people that we need, in particular in Peru. Now, moving on to next year, we're looking, or the rest of this year, we're looking to commission the mine. That'll happen towards the end of this year, early next year. We believe we can produce at an industry low cost. I'll talk more about that later. We're going to continue to do aggressive exploration, not only at the mine itself, but also regionally. So I'll talk more about that as well. And then finally, we want to grow the company. Some of you may have noted that we made an acquisition, or we announced that we're going to do an acquisition in Canada. We're still working on the definitive agreement for that, but we may look at other stuff as well. Be that as it may, we do have a great opportunity to expand Bethania, and that'll probably be our focus for growth in the near term. Is not only to get this current plant and expansion going this year, but also look at a phase 2 in the next few years as well. So we think we're well positioned to be re-rated much higher once we're in production. Here's our shareholder base. I'm actually the largest shareholder, founder of the company. So myself and the rest of management, we hold a big position in the company, which I think is really, really great. Erica Sori is one of the sellers of the mine. So she sold it to us and took some stock in that deal. So she is actually the second largest shareholder now since December. We've got some other great institutional investors in our stock as well. And several more below 5%. I just mentioned the top ones here. So we really see ourselves as growing into a silver producer, and there are very few silver focused companies out there, and so we feel that it's a great opportunity for a new company, a new entrant into the space. Unlike gold, where there's sort of dozens and dozens of gold mining, junior gold mining, and different size gold mining companies, silver, there's maybe about 10 true silver producers, and by that I mean that they produce more than 50% of their revenue from silver. So when investors do want to buy silver production, they want a company that is producing mostly silver, and so for that there are very few companies out there. We are very excited to be joining that group very shortly. We do have to execute on our project. We're very confident we're going to do that. And then I think you can see that we should get a much higher valuation once we are producing and making money, cash flow with our mine. Now, many junior or many silver mining companies started off much like we are, although this business model has not really been undertaken recently, i.e. in the last 10 years. But when I was an analyst, which was in the earlier 2000s, this was something that we did see from time to time, and some of these companies have been very, very successful at building silver producers, starting off with a small high-grade operation, much like what we were doing. And in particular, I would point to First Majestic, which has been very successful in Mexico with now more than a $3 billion market cap. They started off with a small mine, very similar to ours. And even if you go back even further, before my time, to be honest, in the mid-90s, you had Pan American starting with the same kind of operation, actually in Peru, like our mine. So this is an opportunity where you can start small and really grow through both expansion of your own operations and also through acquisition. And it has been, it's been done successfully by a number of other companies. So that's the business model that we're following. And to summarize why we're excited about this business model. We've got the number one taken care of. You start off with a high grade asset in either Peru or Mexico. In our case, we're in Peru, but those are two great countries where you can benefit from the strong mining culture and also find these opportunities that can be under the radar. Then once you find target, you can increase the value, or you can optimize the value by bringing capital to it that otherwise wouldn't be available. And we're able to do that now, especially now that we're public. We've got even greater access to capital. So, you look at your increasing resource and reserves by drilling, you're expanding production, you're reducing costs, and we can do all of those things with our mine, with Bethania. With silver, you benefit from byproduct sales most of the time. You see that in our case, we do have lead, zinc, copper, and gold in our project. Now, I should maybe update this slide with the recent higher silver price. It's probably more like 70-30 or 65-35 in terms of our percentage of silver. So we're a very high concentration in silver in terms of our expected production. And then finally, I personally really like the lower risk profile of these high grade mines, the predictable geology, low capital intensity, meaning low capex. Raising money still can be a challenge. It's still a big risk for small companies, and so when you can put a mine into production like what we're doing for relatively small amounts of capital, that's a huge advantage over having to build a $200 or $500 million open pit. So that's what someone else's business model. We don't worry about that. Okay, here's where our mine is located. We're in a great neighborhood here in central Peru. You can see where Lima is on the slide. And, this central Peru area is really mining country. So thank you, Johan. It's really mining country. There are dozens and dozens of mines within a few hundred kilometers of Bethania. And so it's a great neighborhood. It's very mining friendly part of Peru. Peru's a big country. There can be regional differences, but here this is mining country. For our mine, it's really easy to get there, which is a blessing. We can fly to Huancayo, which is a city of about 500,000 people up in the mountains, and it's about a 3-hour drive from there. So when I'm taking visitors or visiting myself, that's the way I would go. Obviously, we can drive right to site as well from Lima. So the concentrate that we're producing will actually just go by truck all the way to Lima. And there's roads available to do that. Okay, in terms of our cost, we expect that we're going to benefit from a number of factors that are really helpful for our project. So first of all, we already know we've got high grades, so that's because the mine was in production, so we know what they are. We're going to improve the recoveries though by having our own plant, and we're going to be able to improve them a number of different ways. First of all, we can recover copper and gold for the first time ever. The previous owners were never paid for copper and gold, so that helps. There's appreciable levels of copper and gold in the project, as well as the silver, lead, and zinc. And just having your own plant designed for your ore body is a big advantage over toll milling. There's no question about that. Then we do not have any royalties or streams on our project. So that is another benefit that goes into that gray box in the costs there. A lot of other projects have nowadays. And the other factor I'll highlight is that even though we're an underground mine, we're very close to surface. So the haulage of the ore around the mine is very short distances, which is another benefit for our production costs. So we're expecting our costs to be among the lowest in Latin America, and we're very excited about that aspect of the project as well. That made the acquisition a lot easier to digest, frankly, when I went there the first time, and silver was only $16, $17 an ounce. The all-in sustaining costs for this project in 2015, which was the last full year of production, I can tell you were about a little over $16 an ounce. So we know that. You can go back, look at the books. That's what we did, and so that's a great starting position, to be in. Now we're going to improve that even further, of course, by having our own plant. In that we save on some of the treatment refining costs. We save on the processing, not having the toll milling fee. That's the main factor there. And then the long haul trucking costs basically go to zero on our project. So those three things combined, they're roughly equal in terms of their effect on the cost, and we should be able to save us some significant costs that way. Okay, here's next couple of slides are about the exploration potential. First, just to set the stage here for what we have. So this is one of 6 veins that has been in production and still has ore remaining. There's a 7th vein as well that has had some development but no production. So the non-43-101 resource that we have is based on those 7 veins at the moment. What the previous miners did was they started actually right at surface, and then they would go down, added in basically every 30 meters roughly. And the lowest level of the mine right now that we have access to, or that we can drive into from the side of the hill, would be the 670 level. So we're basically right at the valley floor now at that level. There's still ore there at the 670 level. But they did start going one level below that before they shut the mine down in 2016. So we do have some development at this 640 level, 30 meters below. So that's what we'll be starting with when we reactivate the mine. There's ore available at those 2 levels. There's a lot more development that needs to be done at the 640 level. But that's what we'll be working on when we start, most likely. And then the other thing I just want to mention on this slide is that the top of the hill here, where they started mining, down to the 640 level is only 150 meters. So in terms of the depth potential here, some of these high-grade vein mines, steeply dipping veins, can go hundreds and hundreds of meters below surface. In fact, Curavilca, which is Pan American's first mine in Peru, now they sold it about 8 years ago, but there is still mining going on there, and they're about 1 kilometer below the surface. So I'm not saying that necessarily we'll will happen for us, but it does happen. And so we feel that we've got a lot of good potential at depth. And let's just talk about the potential of the ore body here, because this is really important for our near-term development and exploration potential. You know, one of the things I like to see when I'm looking at acquisitions and when I'm looking at projects is I want to see low-hanging fruit on the exploration. So stuff that we're not paying for, but is easy to achieve, is easy to get or find. And that's exactly what we have with Bethania. We've got a project we've got an ore body here where most of the mining has been on this western side of the hill, and that's where it's been mined out. So our 8 million ounce non-43-101 resource would be essentially around the two lower levels of the mine where those stars are. At the very bottom levels of the mine, we still are getting very, very high silver grades. And, to be honest, these grades, I mean, they're obviously chosen because they're exceptional grades, but they're actually not that unusual for what has been mined historically. And so it does suggest that we've got, a long way to go at depth before we'll find the bottom of this. Because you would expect to see some metal zonation as you get deeper and deeper, and we're not seeing that metal zonation yet. We're still getting very, very high silver grades. Out to the east, we do see potential to extend all 7 of the veins along strike and possibly pick up more veins. They're all open towards Española Dos, which is it's an area that was mined at some point in the last 20 years, but it's not part of our resource. So we do believe everything is going to connect up, going sort of 500 plus meters to the east there, and then even further. There's no reason why the veins necessarily will stop there. So I think we've got a lot of potential out to the east, and we've got the even easier, I would say, potential is at depth. So those will be our 2 areas of focus as we start drilling out the resource in the near term here. The social situation is very important no matter where you work. But in Peru, it's important as well, of course. In our case, at our particular project, we're only affected by one community. We're only on the land of one community called Poroche. So that's good, obviously, because we can work exclusively with this community to develop the project, and that's what we've been doing. That's what the previous owners did. They did a great job, and they maintained a very good relationship, and that's what we're doing now. It is kind of interesting to note that in Peru, the rules are such that for the EIA that you have to get approval from your local community before you can submit the final documents to the government. So in a sense, you are working with your community to get that EIA approved, and that's exactly what we did. Mostly in 2019 is when all that consultation happened, and again, we were successful with that. Now that we're looking at ramping up back at site, I mean, not a lot happened last year, obviously, but we are looking at ramping up our presence at site now, and we're working with the community on that. There are going to be new COVID protocols that we have to factor in. In particular, it's going to be keeping our employees separated from anyone else, and obviously then keeping our own health and safety best practices while people are at site for our company. So we are factoring all that in. Nothing is that dramatic for us in terms of the COVID effects, but it is something that we are strongly working on. And fortunately, there's a number of other mining companies in Peru that have already blazed the trail and have basically set the best practices for the industry, because they've had their mining industry open since May of 2020. Finally, one slide quickly just to mention the acquisition that we are making in Ontario, Canada. This is the cobalt camp. These are the properties that are owned by a company called First Cobalt. They were really focused on looking for a cobalt deposit, and were not successful at doing so. However, they did, hit, essentially regular cobalt style silver veins, intersections in the process of their drilling program that they did, a very extensive drilling program that they did back in 2017-18. So we looked at that data and we saw the opportunity to essentially follow up on some of these big high-grade silver hits that they had and build out some tonnage and maybe, we think we can build a mine here in the next several years. It's a longer-term project for us. It's something that, is going to be something we can definitely kind of dip our toe in the water before we dive in. But is a great opportunity. It's a very unique asset. It's in Canada, which is a great, geography for mining. And we're very excited to get into it. It's not going to cost us much to do the, to do this in our first year. And it's something that we can add more and more capital to in the next few years, depending on success. And once we identify an area where we want to build a high-grade mine. There's a lot of similarities, especially on the mining, to Bethania, to our experience in Peru. The metallurgy is different, the geology is different, but at the end of the day, what you're going to do here is you're going to build a high-grade, small tonnage mine, produce a few million ounces a year of silver at low cost, much like we want to do, or much like we are doing in Peru right now. So that's the opportunity here, and it's a very exciting kind of option for us now in the future. Here's our management team. We basically combined our sort of our corporate team with a few of the key people from Miramont, the shell that we took over, and they've been great and very supportive. And as we've been building out the team, my team is basically all in Peru, so we're building out as well as we now get more active on the mine development side. Got a great board, including Quentin Hennig, who's a well-known guy in the mining sector now. We're very, I think we're building a great team here. And that is it on the presentation. So I hope you guys have some questions, and I'd be happy to answer them.
Super, David. Thank you very much. Let me stop that here. And let me also check here the start on the questions. Let's start with one here. Why did you apply for another project in Canada when you are that active in Peru?
Well, it's one of those things where you have to make that decision. Do we want to do it, or are we basically just willing to lose this opportunity forever? Or I'm exaggerating, but it's an opportunity we felt we either had to take advantage of now, or potentially never do it. And so the timing, I agree, it was maybe not what I thought we would be doing in our first 3 months of being a public company, but the opportunity came. I think the deal that we negotiated with First Cobalt is really good for us. Mm-hmm. After we closed the acquisition on the Kerr properties, which are the more advanced of between the Kerr and the joint venture, which is the bigger area, the Kerr area is by far the most advanced. That's where most of the high grade hits are, and a lot of the historical mining is. So we think we've got a lot of really good short-term targets there that we can go after. Now, the way we structured this deal is First Cobalt is going to contribute its flow-through dollars, money, 6-8 months. So that means we can get a lot of really good information, a lot of good data before we have to make the next decision about whether to go forward or not. So I think it's a great, that because how we structured the deal, that made me a lot more comfortable that if the market's good, we can get more active and on this project in the second half of this year and on to 2022. If the market goes cold, then we can just put it on ice and focus on Bethania, and that's what we will do. So that option, to me, makes it a really great deal for Kuya.
Well, what holding costs do you have on that care acquisition?
They'll be minimal. So, like in the probably tens of thousands of dollars, maybe a few tens of thousands of dollars a month, maybe under $100,000 a year, probably on the holding costs for
Okay,
the Kerr assets. And keep in mind, Kerr is the Kerr section, which is about 1,000 hectares of the 10,000. That's what we're acquiring up front, and then the rest goes into a joint venture.
Okay, super. As we are already talking about care, I wanted to do this later, but now we talk about it. As far as I know, care is, of course, it's a cobalt silver camp. So will be cobalt then also be in your focus, or do you say, no, we care mostly about silver, cobalt is a byproduct, and we see it as also, let's say, e-mobility, renewable energy, metal. That's it.
So look, credit to First Cobalt and the other, cobalt focused companies that have been in this area of northeastern Ontario. They did a good job at convincing people that this is a cobalt project.
Yeah.
It's not. It really isn't. If you look at the history of the they mined for almost 90 years there. Definitely the early part of the century, there was more mining going on than the latter half. But there was mining going on until 1989 there, and it was dominantly silver. Sometimes you get a cobalt byproduct, which is fine. We'll take it, but it's a silver camp. There is a town there called Cobalt, Ontario, which creates a very confusing message as well. But that town has been there for more than 100 years now, so we probably won't be able to change the name. So yeah, we have to work on the messaging there. But the reality is, anybody who knows the geology of this camp, it knows it's really a silver camp. It's really a silver camp, and we'll be focused on that. And if we may or may, very likely we'll get some cobalt byproduct from this project, and that's fine. Yeah.
Okay, super. Let's go to Peru. Let's go to Bethania. Who owned and operated this mine before your acquisition? And of course, that was also one of my questions. Why did they even sell it? Because it looks like a fantastic project.
Okay, that's a great question. I mean, I used to in my earlier days, I spent a lot more time on the history of the mine. So I'll just go into it now since you asked the question. So the mine was owned by this Peruvian family with their surname is Soria. So Erica Soria, now our second largest shareholder, was one of the vendors. The other family member took all cash, so they're not a shareholder. So basically two shareholders, from the same family, father and daughter actually, and they had owned and run the mine, and I believe and they inherited it from the grandfather actually, originally Erica's grandfather. So that's the history of the ownership, and we bought it essentially as a share purchase. So we just bought the mining company from them for cash and stock. So we own actually the same company that was mining. We just own it now 100%, called SNL Andes is what it's called. We will be changing the name. But so that's the history of the ownership. Now, why did they sell it? Well, that's a great question, because actually they were doing okay with this project when silver prices were higher. And specifically in 2012 and 2013, they were profitable. So they were making money as a toll milling operation. Not big money, because the margins are very skinny on toll milling, but they were making money and silver prices were high. Then in 2014, two things happened. One is that they borrowed some money for the bank to do a minor expansion, which of the mine, which was successful technically, but financially not successful. And then the silver prices started falling. So they swung into a loss-making position in 2014. And they kept losing money 2015, 16, finally put the mine on care and maintenance. So they essentially ate those losses personally for three years or 2 and a bit years. And they just were not in the position that they had the working capital available to keep running the mine and wait another, 3 or 4 years for the silver price to go back up again. So when we walked in, we looked at the opportunity. We thought, first of all, we gotta pay off or buy all this debt that they had. So we did that. We did that back when we were private, back in 2018, 2019. We saw the opportunity to build our own mill there, and that was really an important part of the investment case. Not that interested in going back into a toll milling situation, but for a relatively small amount of capital, we thought we could build our own mill there, get it permitted, quickly started it up, and then obviously we could look at expanding it from there. So that was the reason. That's the whole genesis of the investment, going back to 2017 and before. And so far so good. It's playing out more or less like we expected.
Yeah, of course, and fully understood, because they are your second largest shareholder, so they have skin in the game. And when you are successful, they are successful, but they must no longer work for it, I would say. And that's good.
Actually, Erica still consults to us, but yeah, it's a great alignment of interests. And again, I didn't go too much into my background, but I did work for or did have a few years of experience in private equity, and in private equity, you learn that aligning interests of the various, stakeholders, shareholders, is really important. And so, we're very happy about how that worked out.
Yeah. Okay, super. So we have several questions about money, of course. So how much money do you need to bring Bethania really back online, meaning to bring it into life?
So we probably need, I would say, a minimum of 15 to 20 million Canadian. The capex that we have talked about is about 10 million USD for the plant and the underground expansion. And of course, there'll be probably some more costs, obviously, running the company and working capital and stuff. So it's going to be in that range. We're in a great position right now, though. I have to say, we did raise enough money from our RTO that we were able to buy the mine. That was a big expense that we did. So done, check. And then we've got enough money to do our first phase drill program, which we're starting soon. All the detailed engineering work, additional, some minor permitting that needs to be done. So all that technical work that we need to do over the next few months, we are already fully funded for. So we're in a good position for that. And at some point we will need to raise more money, and that will be the last tranche to get us into production.
And how do you want to finance that? Let's say 20 million Canadian dollars. Of course, you can issue some more shares. You still have only 38 million shares roughly outstanding so far, which is really not that much to go in production. Or do you say, hey, why not? We can maybe get like a line of credit. I mean, there are some friends of us in Zug who would love to lend you the money, I could imagine. And do you think it's like a mixture, or do you want to go full on equity?
I think we're open to different combinations, to be honest. You have to, you have to sort of work or build in all different scenarios, because we don't know what the market's going to be like in a few months. And it can change very quickly, as we've seen in the last few months. So, and I think the other comment I would make about that is that, again, going back to our experience as a private company, we were, I started building relationships in, private equity, offtake guys, Zug, so metals traders, etc., who can do other types of financing as well. So we are talking to some of those guys right now, and obviously we've got as well the flexibility with the capital markets, should that benefit us. So I think we're in a good position. We have flexibility, and as a CEO, that's all you want. You want to be able to get to that point and then make the best decision for all the shareholders.
Okay. Do you have all permits in place? Because I understood you're running on 350 tons per day. That looks to me like a small scale license, as they call it in Peru, right, which we have for toll milling, for example, where you have a lot of exemptions. But is that the case, that you have that all in place? First thing, and second thing, what happens if you go, let's say, to 500 tons per day or 1,000? Do you need again to apply for, or or can you just do it? Let's say that you go to the authorities and say, hey guys, we are applying for that, but it's like a formal thing, I would call it.
Okay, so first of all, you're right. The 350 tons per day falls under a type of permitting you can do in Peru called a PPM, and we chose that partly. I mean, partly because we thought we could get it more quickly, and in terms of the EIA, which is that's I think in the most involved, highly involved, the riskiest permit to get. I think doing it as a PPM really helped us. We were able to get it relatively quickly. Even with COVID happening last year, we were still able to get it in August. So that's the status now. There are, as you can imagine, there are some other permits that are required. It's not just the environmental permit. That is a major one. But as we complete our detailed engineering, over the next few months, we will file all the other permits, and they should just be kind of tick the box kind of permits. We provide the information for the government. We get it. It's not there's a process for that, and dozens of Peruvian mining companies do that stuff all day long. So we're not that worried about it, but we do have to do it, in a good professional way. Mm-hmm. Okay, now to your question about the expansion. So to go to a greater number of tons, like 500 or more, we would move up to a different permitting regime called the general regime, and we do plan to do that. Now, our philosophy has always been it's easier to expand the mine and get those permits as a modification rather than to start from zero. And so that's the position we're in. So the entire time, if we decide we're going to go for the general regime permit and expand our mine to whatever, 500, 750, whatever number is the right number, we can be producing still at 350 and making money the entire time, whatever that process takes. If that takes a year, we'll still make money during that year instead of having to wait. So I think that's a much better position for us and our shareholders than to necessarily try for a bigger permit from day one.
Yeah. Okay, super. Do you have to do still a pre-feasibility study or a feasibility study? First point. Second point is, as you said, that you have a lot of your resources not 43-101 compliant. So how many more meters do you need to drill, saying, okay, how much more time do you need to really prove that for 43-101? Because I could imagine this is very important for financing and to set up a mine plan, a detailed mine plan.
Yeah. I'll answer the PEA, the feasibility study question first. So in terms of that, the answer is no, we're not going to do one. We're already well past that internally. We've been doing engineering work on this project since before we went public. And just to keep in mind, if you're a private company, you don't need to do 43-101 reports. You do whatever reports are necessary. But the 43-101 is something that's more mandated by regulators to communicate with investors than it is something that a company actually needs to do for itself. So we did our basic engineering last year, and actually 2019 and 2020, and then we're now in the detailed engineering phase. We decided to do a PEA and basically attach that to the scope of the Mining Plus mandate. They're really, the majority of their mandate is actually the detailed engineering of our mine design, our underground mine plan. We wanted them to do a PEA as well, and they agreed to do that. And that's great. That will help us communicate with the market more effectively and be able to talk about our numbers, in a much more open way, I would say, because of the issues with regulation of what junior mining companies say. Once you get into production, Frank, you have a lot more flexibility as to what you can say and what you can't say. But when you're not in production, the rules are quite strict, and we have to worry about that. Mm-hmm. Now, in terms of the resource estimate, that's another really good question. It's something that we've definitely kind of weighed the pros and cons the entire time that we were private as to what to do about this. The drilling program, it's not in the strict sense necessary. We could go and do like a lot of underground sampling, resampling, and possibly get a resource that way, enough data to do a resource. What we decided to do, though, is to use the best practices and to do a drill program. We've got a 5,000 meter drill program set up right now, planned. So we're going to execute that. We will have a 43101 resource update done at post that drilling program. Don't expect it to be dramatically different than our current resource, our non-43101 resource. But it will, as Johan, as you mentioned, it will be really positive in terms of helping us plan the mine as well as, just getting a resource number out there.
Great. So what is the average grade? My friend Martin from Zurich is asking here, what is the average silver grade, as the high grades are on very short meters? Meaning we saw a lot of great grades with 45 ounces, 200 ounces, but I would call it more on, let's say, on the narrow vein side. So what grades are you calculating, and what grades have you seen more on an average and maybe over 1, 2, 3, 4, 5 meters width?
Well, look, I think the most important way to answer that is to look at the actual head grades that the mine produced when it was in production up until 2016, and they averaged in the last number of years about 15 ounces per ton silver. 15. Okay, 15, 1-5. So that's what we are expecting will be our our head grade, and that's what we're going to try and plan around. Obviously, not every stope is the same. Some are more, some are less, but that's what we're going to aim to achieve on an average. Now, in terms of the resource grade, that's a diluted grade, so that's actually delivered to the mill. So our resource grade would be, I believe, around 18 ounces, but it's in our 43101. There is the chart on the historical resource in there, so you're welcome to go and look at that, and the numbers are in there.
Okay, so with what, let's say, silver or silver equivalent production are you, let's say, calculating or estimating already? I know it's a forward-looking statement for the regulators, but I think it's important for our viewers of what size a possible investor could calculate in the start. Second question, what would be an initial mine life, and to where do you think you can bring that after 2-3 years?
Sure. So look, the reality is that if you take our 350 ton per day mining rate and you take our expected head grades, or the reserve grade, there's a small portion that was because it was developed on all sides, the previous mining company considered to be a reserve. So you could look at that as well. And if you kind of do the numbers, the basic math, you're gonna see that we should be able to produce around 2 million ounces per year pure silver, maybe a little less, 1.8 to 2 million, and then our equivalent would be around 2.5 when you consider the lead, zinc, copper, and gold. So that'll be the range of, or that'll be the approximate production that we're expecting. Your second question, okay, so the current mine life, again, on the historical resource would be about 4 years. And
then to what do you think you can bring that up?
Yeah, look,
what is your plan?
As I showed you on that map with the pink colors of where the veins are, you can see there's a lot of white space in that page where we expect that we can drill and basically find veins at depth and along strike. So low-hanging fruit, our internal target is we think we can get 20 to 25 million ounces there, over the next 1 to 2 years, depending on how aggressively we drill, and so that would push our mine life at the current rate to 10 to 12 years.
Super. So we could expect you to be in production next year.
Yeah, the things that are gating items on our production are going to be COVID-19, weather.
Let's assume things go the way you planned it.
Yeah, if they go all things planned, we should be putting something through the mill by the end of this year. Maybe it's just commissioning, material. We should be putting something through the mill by the end of this year and in full production by early next year. That would be the plan.
Okay, super. So if I do my calculation, and I assume $12 AISC, $25 silver, that's a $13 margin, I would call it. With 2.5 million ounces, we talk already about $32 million of profit, or let's say cash flow before taxes. Yeah, that's a nice amount of money, especially when I look at your market cap today, which is still around 80 million Canadian dollars. So this is more than half of your market cap today. This is fantastic. You said also probably a second mine in Peru could be something for the future. So would be a plan then to say, okay, first of all, Bethania, let's put that on solid pillars, on solid ground, a good foundation. We see Bethania going well, and then we probably take parts of the money and put up a second mine in Peru.
Yeah, I mean, look, in the ideal case, that would be our plan. Is we want to prove ourselves with Bethania, so that we get that better valuation, and then that makes our cost of capital that much less if we do find another project that we want to get involved with. Mm-hmm. So, I'd rather be in the position of doing that with a market cap of 300 or 400 million than 100 million, right? So that's absolutely. We want to focus on Bethania because to me, that's where we can essentially deliver the easiest or the quickest value for shareholders right now, is by keeping our eyes focused on that.
Mm-hmm. Fantastic. So I got several questions on Kuya, and funny enough, my friend Sönke found out that Kuya in Filipino means brother. So what does Kuya mean in the Peruvian meaning?
So that's a coincidence. I didn't know that when we named the company, it's so the origin of the word came from the Quechuan word for mine, mm-hmm. which was translated to us to be spelled Quhuya. So we then simplified it to just a K. Mm-hmm. So I'm actually not sure how it is pronounced exactly in Quechuan. Quechuan, by the way, for those who don't know, is that would be the biggest kind of native language of Peru. So obviously Spanish is their official language, but then when you look at the various indigenous populations who were there before the Spanish came there, Quechuan would be the biggest. They do have a number of other big populations, Aymara and others as well in the country. But Quechuan would be the next most spoken language after Spanish, and it is in that central Peru area. That would be the dominant native language.
Mm-hmm. Okay. Then how often do you travel to Peru? Is an investor asking.
Great question. I would say pre-COVID, I was going 3 to 4 times a year. And then, obviously this, it's been now almost exactly a year since I've been there. Mm-hmm. So, and I do miss going down, and I'm desperate, or very anxious, I should say, to go back. But I think we've got a few more months here where I've got to just wait it out.
Mm-hmm. Super. Oh, there comes a nice question up. I'm still wondering why a major silver producer didn't step in ahead of you and acquire this family mine. Was there a bidding process? Could you explain that?
Well, from my experience in capital markets, I'm not sure that a lot of bigger silver mining companies actually go to that level where they're actually seeking out private, family-run silver mines. I think their M&A playbook, or their M&A pipeline, is going to be mostly coming from other smaller public companies where bankers are bringing them ideas. And I could be wrong. Maybe there's a corporate finance group out there within a bigger company that's going out and looking under rocks and searching for stuff. But that has not been my experience. Once you get into that, let's say $1 billion plus market cap range, you basically just start opening the doors and letting the bankers come in and basically give you ideas, and then you try and choose the best one, or you don't do anything, depending on. So I think honestly, we did not run into any other competition when we were looking at this project. We had really good timing. The mine had only been shut down for a little over a year, and we got in there in 2017 when the market was still quite crappy, frankly, for silver. So we had fortunate timing. I think if it were today, it could be different. You could have, at least a few other juniors trying to look at this and see what they can do. But so we were very fortunate in that respect that we got in when we did.
So right time, right place, and the pockets full of money.
Yeah.
That's great. So what is the current situation in Peru? Because we have maybe some investors who are a little bit hesitant on Peru, which don't know about political situation. I mean, the mining situation is very clear. You described that already. Yeah. So what's your take on that? And also what I would in addition ask you, when we talk already about politics, you said you have just one community to deal with. Do you have to deal also with the county, or do you face any problems? Meaning, are you welcome in the community, really?
Yeah. Okay. I'll answer your first question first, and then I'll go to the big picture politics. Yeah. So, the community, we find it very welcoming. I mean, honestly, there is no activity in our immediate area where the mine is, except essentially there were some houses built there for the mine, essentially about, in the 70s and 80s, most likely. So there are, 20 or 25 houses near the mine. That would be that would be the village. And then the community itself, the Peroche community, kind of expands for 50 kilometers to the west. Mm-hmm. So the bigger land, but it's a very isolated and small population, very welcome there. In terms of the other political jurisdictions, our mine is located in the department of Huancavelica. So, that's a department that does have some other mines, but it's not as busy as Pasco or Junín to the north of us. The mining is a lot more dense up there, and there's a lot more activity going on. As we start to get sort of south towards in Huancavelica department, which is like a province or a state in Peru, there are some mines, but not nearly as many. So we found it actually really easy to deal with the government. They have time, they don't have a huge stack of files to be looking at. So it's been pretty effective in that sense, and no problems really.
Okay. So the big picture for Peru.
Big picture for Peru. Look, I mean, in my career as an investor and analyst, I've covered or I've invested in projects all over the world, in all continents. And, to me, Peru would be among the better places to invest. Okay. It's not maybe Canada in terms of the legal coverage that you have, but it's really quite good. I think it's among the better places within Latin America. I think pre-COVID, Peru was sort of rising up the charts, getting quite close to Chile in terms of perceived risk. When you look at their, some of their financial metrics and the cost of debt there was getting quite high, not quite as good as Chile, but very close. And so, look, as a country where it's politically pretty stable, they do have a lot of political parties there, but in a sense that sort of keeps everything pretty even. Very unlikely that you would have sort of someone come out of nowhere from the left to the right and take over the country like we've seen in some of the smaller Latin American countries over the years. I don't think there's a big risk of that happening in Peru. And then from a mining perspective, it is their most important industry by GDP. There's huge companies there, there's small companies, and everyone in between. And so it's a really strong industry. There's the opportunity, you've got essentially inherent lobbying there because of how big the industry is. So, you know, there's no place that's perfect, but for me, Peru is a great place to be, doing mining. I'm not interested in going into, really risky jurisdictions with Kuya, but Peru is somewhere we feel really comfortable.
Yeah, of course, and it has a 500-year tradition of mining. We have an investor from Frankfurt who is asking, what is about analyst coverage?
Well, right now we have coverage from only one firm, but it's great, Cormark Securities. So feel free to hit them up if you know them for research. And look, we're a new company. We've only been trading for 3 months. So I think give us time. I think there will be more institutional analyst coverage in due course.
Absolutely. As you are only like 12 months away from production, I would call.
Exactly.
Fantastic. So let me shortly check because we are now over the hour. That is fantastic. A lot of interest. Just want to make sure that I'm not missing any question here. Yeah, that looks good. Yep. No, that's fine. That was answered. Yeah, super. We are fine. Also from my side, all the questions were done and you answered everything. Thank you very much for taking the time to talk to our viewers here and to present Kuya. And it looks like you guys had a really good start already. Now time to deliver on 5,000 meters drill program. And but I have no doubt that you will do it, especially also with Quinton Henning here in the team, who is a really world well-known geologist and a great company maker, I would call it. This is fantastic. So thank you very much, David. Thanks for presenting and wish you all the best. And I have a good feeling that we talk very soon. Okay.
Thanks, Johan. Thanks, everyone, for watching. And we look forward to keeping track of our progress with us.
Absolutely. That's how we do it. Yeah, ladies and gentlemen, that was our virtual roadshow with Kuya Silver. And I think you saw in the last hour, this is a great new company, but really going into the footsteps of companies like a Endeavor Silver, like a First Majestic, like a Fortuna Silver, because they all started like this. But I like really the setup. First of all, the team is outstanding around David, and also with Dr. Quinton Henning on board. That's the one thing. On the other hand, they have great shareholders, great support here, and I like 29% of the management is in the hands of the management. This is a real fully commitment because I'm pretty sure they won't do anything against their own wells. And also, secondly, I think 5,000 meters of drilling, like confirmation drilling, I would call this to really show them a 43-101 resource and going into production within the next 12 months. This is very fast and great. And as I already said, we talk about 25, maybe up to $35 million of pre-tax cash flow. This is quite a nice amount of money with that low market cap Kuya has so far. And also what I should say, the name of Kuya still on the German exchanges is Miramont Resources. Unfortunately, the digitalization of the German exchanges is still a bit lagging. They are still a little bit behind here. And we try to get that fixed, that the correct name will be shown here when you type in Kuya Silver. They are traded in Germany, of course, in Frankfurt, and I think also at TradeGate very soon. And we want to make sure that this works for you also. Yeah, and after a chart analysis, I did already, my first price target for the stock is $2.50, and I could imagine when the company is in production, I can see that easily going to $4 to $5 within the next 18 to 24 months. And saying that only with $25 silver. Watch out when it goes up over the $30 level in silver. Yeah, so thank you very much. I wish you all the best. Stay healthy. That's the most important thing here with COVID-19 and also in the lockdown. I hope that we can still restart our travel, our physical roadshows by fall this year. That's still our hope. And by then, I would advise you have a gin tonic, have a glass of red wine, because that helps a lot for the nerves and it's against COVID for sure. And so all the best. Thank you very much and bye-bye from Switzerland and bye-bye to Toronto.
Bye. Thanks.